Morning, folks. This is Mayuresh Joshi. Can you hear my audio? And can you see me as well? You can just put your hand up for a few responses. That will be good enough. We can start in a minute. Super. I've got a few responses. Thanks a ton, guys. I'm presuming that I'm audible and visible as well. Wait for a minute. I think some of participants are joining in, and then we'll see. Okay, let's start. 8:48. So, morning, folks. Mayuresh Joshi. Welcome to this podcast of William O'Neill. Clear disclaimer, as put in the slide as well. This should not be construed to be any buying or selling information or recommendation at all, and in no way should be considered as an investment advice. So, where are we placed right now? Tough days, last few days for the Nifty itself. In the downward or the downtrend perspective from an O'Neill lens that we are going through at this point of time, the sense of cautiousness and the element of being on the sidelines is something that we've always followed as per our rule-based methodology. I think the volatility in the market still continues. There is a lot of data points specifically on the global scene that the markets have to comprehend with, and therefore the kind of reactions that you're probably seeing on the markets to a certain extent are justified for the macro headwinds. And I'll be speaking about the sore point in today's presentation, which is inflation, which is probably creating ripple effects around the globe. Along with that, tightening of liquidity and rate hikes to probably curb the inflation rise globally and locally as well. Is also creating huge elements of an upside risk as far as earnings is concerned, and the downgrades to GDP both at a global and a local level as well. So if you probably look at the index itself, obviously it's going through the grind. The sub indices itself are going through a grind as well. So I think it's more broad-based, like we've seen in earlier downfalls or earlier downtrends as well. And because of this broad-based nature of distribution and activity on the downside that we are probably witnessing, assuming our rules and waiting for the opportunity in terms of market making an intermittent bottom and waiting for a follow-through day after the rally attempt, if and when it is achieved, becomes extremely critical. So being on the sidelines, observing which sectors are making bases, which stocks are assuming leadership within those bases, I think we'll all come to know that in the next few days or next few weeks. As O'Neill himself has said, I think once a market goes through a bear phase, obviously I think it gives a lot of opportunities as the next bull run starts with different set of sectors and different set of stocks that might assume leadership. So looking at data points and looking at the assumptions on what markets will throw us, we will probably have that put on our radar, and we'll be putting it out to you guys as we do on a daily basis and a periodic basis as the market progresses. Now, key news from from yesterday till today morning session, KEC, obviously I think we've seen a lot of power prices sort of situation across the country, not witnessing here in Mumbai at least, being a major metro city, but power transmission distribution is going to remain in focus. KEC has won orders almost worth 1150 odd crores. FIs continue their selling spree. I think the average selling that they're probably doing of 3,500, 4,000 crores was a tad bit lesser yesterday, almost 1789 sold. DI is compensating that as they've been doing persistently, but it was still a net sell figure. SJVN is setting up a 490 megawatt power plant in Nepal. Obviously, I think the Prime Minister's visit there and some agreements have been signed up. Wheat prices in other major news have hit a record high at $435 a ton. India's decision to ban wheat exports probably to ensure that locally there is no food shortage, because food inflation is going through the roof globally because of the Russia-Ukraine crisis, being one of the major exporters and suppliers of wheat as well. I think that is creating ripple effects after India decided to ban the export of wheat. Again, I think if you probably look at the entire scenario in terms of food inflation, it's a very interesting graph. I'll probably have that put forth in one of our evening mailers as well. I think assuming any other commodity, I think food as a commodity spread across different subsets has had the maximum northward direction movement, which means the maximum inflation effect outside fuel has been caused because of food, and that is a cause of concern and a worry for a lot of global economies, and that can also act as a headwind along with inflation, which I'm going to discuss in the following few slides. A few key results came in yesterday. Raymond, after market hours, posted a very good set of numbers, in my opinion. Let's see how the markets react to these numbers as well. I think if you look at their the segmental performance, everything is probably done well. So including branded apparel, we're probably looking at even the real estate arm with a lot of demand expected to come through. And margins have probably held up in their core business of both branded apparel and branded textiles as well. I think that's a good show. Net debt has come down to 1,000 odd crores. And as I said, the real estate arm is doing exceedingly well. For ME Organics, the year-on-year performance has been excellent. However, I think the margin performance was quite okay. Therefore, I think the kind of capex plans that they have announced and the kind of reaction that might come through might come on the operating performance for ME. Key results in today's trading sessions, specifically, I think out of Nifty companies, Bharti Indian Oil expected to post results. We've seen a lot of price damage happen in these diagnostic stocks. And the reaction is because of what Tata has posted in its ad, right? Tata 1mg, the ad, if you've probably seen, they're trying to disrupt the entire B2C model by putting in rates which are way below market rates at this point of time. So I think if you look at all the diagnostic stocks yesterday, they had taken a beating because of competition having a huge amount of pricing damage as far as the entire industry is concerned. In the broader universe, Abbott, Bajaj Electricals, Galaxy Surfactants are probably expected to post their set of numbers as well. The expectations for Bharti, capital allocation on 5G during the year, what happens in terms of the ARPU growth, because ARPU for Jio and Vodafone was exceptional on a quarter-on-quarter basis. So can Bharti outdo that? Because Bharti has been adding a lot more subscribers compared to what Jio and Vodafone has been shedding a lot because of its business model itself. But the expectations of EBITDA margins at 26%, how African business is expected to do, and whether price hikes in the management commentary, where Sunil Bharti Mittal himself mentioned taking ARPUs close to 200 odd rupees in the next few quarters, which can be a reality. It will hit our pockets, but I think it's a same move for telecom companies, assuming the kind of debt and leverage that they are carrying. So I think this is some of the consensus numbers for one of the largest telecom companies and one of the major earnings reporting today from the Nifty company, which is Bharti Intel. Overnight, Nasdaq showed its downward move with 1.5% and a quarter kind of a move on the downside. Dow closed flattish. Today's trading session, as far as the Asian markets are concerned, Kospi almost 0.5% up, Nikkei 0.4% up, Shanghai and Hang Seng are reacting quite reasonably well. Hang Seng, in fact, 2.5% up as well. Brent, in fact, has started showing an upward move as well, $113, $114 a barrel. The expectations, I was reading a lot of media reports, whether the Iran deal gets signed. Because if that happens, Iran is ready to pump in a lot more than 1 million barrels a day into the market, which might pull down prices. But let's see how the Iran deal probably happens. Then the dollar's appreciation against currencies, or the rupee's depreciation against dollar, along with others as well, including the euro, continues, and it opens at 77.70, one of the lowest lows seen in the past few years. SGX is indicating a positive tick at this point of time. It was 40 points up around 8:15 in the morning. It's now 15 points up. We're very close to expiry this week, so let's see how the expiry bound session will be. FIs in yesterday's session, they were almost 80% northwards, having short positions at the index level. That has, to a large extent, come down in yesterday's trade to almost 71, but 71% is still a higher figure. How do they react in this week? What is the rollover statistics? Obviously, we'll come out with a derivatives report on Thursday as well. It's going to be very interesting, and whether this rollover continues means that the upside risk can probably be capped and downside risk probably remains open, assuming global cues the way they pan out. Now, inflation, which has been the sore point. I've got a couple of slides, one at the global level and one at the domestic level as well. I mean, this is no surprise, right, guys? If you look at any economy, right, across the globe, it is running at a multi-year high. Forget a multi-quarter high; it's a multi-decadal high for certain economies. Germany, 41-year high. Sri Lanka is going through its own crisis as well. Look at UK; it's a 30-year high for UK. The Bank of England has already mentioned that there is going to be extreme amount of sore points, and maybe inflation touches double digits, which is not a good sign for global growth and GDP estimates as well. In our own Asian counterparts, South Korea and Taiwan, 13 and 10-year high. In India itself, an 8-year high as well. So I think inflation is a concern, whether it peaks off in the next few months or next few weeks, because China is expected to open up gradually and completely by June. So all the supply chain constraints, the production constraints that China had, that might come back to normalization around June. And if that probably happens, it might pull down inflation and start pulling down inflation to a certain extent. So the hope and the respite factor is that over the next couple of months, if inflation hits its peak, starts tapering sideways and probably starts pulling down as the world starts coming back to normalization terms in the next few months. However, I think it's something that we should look at data points and how that actually pans out versus our estimates on whether that actually happens or not. Coming to inflation, and a very interesting slide that I got from our own domestic stats. The figure that came out last week on the higher side were certain states, because of the inability to pass through fuel prices to a certain extent, and because of their dependency in terms of rural incomes and rural inflationary situation because of certain food items going up significantly. I mean, look at certain states. West Bengal, 9.1% in terms of state inflation. Maharashtra is 8.8%. Telangana, Haryana, all agri-based economies to a large extent, 9% odd. And the lowest inflation is Kerala and Tamil Nadu, which is way below the mean of 7.5% reported. So I think a lot of states are also showing significantly higher traction of inflation, which also means that RBI might hike rates in the June policy as well, which the governor himself has indicated. Because RBI's sole purpose will be to control inflation at this point of time, and then probably in the next 3 to 6 months, as I'm saying, if because of China, inflationary factors start coming down, we hit peak inflation, might start then looking at lower hikes, lesser hikes to probably support growth as well. But there are a lot of ifs and buts attached to this. And as a matter of fact, inflation stays and remains a core issue. So thank you very much for attending this pre-bell. Extended it a little bit, but I wanted to stress upon the point on both inflation and liquidity concerns, which